Jordan Roy-Byrne from thedailygold.com returns to talk about the daily gold price action and its short-term outlook with rising rates ahead. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Jordan, welcome back to Metal Money. How are you doing?
Hey, I'm fine, Patrick. Thanks so much for having me.
Glad to have you back again, Jordan. Appreciate the time you've given. Last time we spoke back on November 23rd of 2021, you said how gold tends to decline, not significantly, but maybe it declines in 4 to 6 or 7 months before the rate hike comes in. And then it has a really good rally where the last 4 times the Fed started hiking rates. From that point on, gold rallied some 27 or 28%. Jordan, the Fed possibly will start raising rates in March, not too far away. And again, we're almost there. Short term, is gold going to have a great spring and summer ahead?
Yeah, I mean, it's interesting you bring that up because I've been talking about that quite a bit in recent months. But the problem with that, the setup right now is I noticed the last 3 times within 2 months. So we're talking about 7-8 weeks before they do the first hike, gold declined the last 3 times. I think it was 11 to 12%. So we are now at the point where we're only maybe 4 weeks away, 4.5 weeks away, something like that. And the issue, my bullish forecast previously was predicated on gold coming down and declining right before they executed the first rate hike. So that's not happening. And so that, the idea now that gold still can have this great rally when they hike rates, I don't see that happening because the history is now run off course, and we're something different is happening. Nevertheless, I do think that gold will have a good year and that it will end the year positively. But I think that over the coming months, I do see some downside risk for gold and silver during this rate hiking cycle, which is not going to last long. And I think the fundamentals for gold, they haven't been bullish in the last year or so. And of course, that's why the market's come down. But I mean, they're shifting. They're starting to shift. And with the way things are set up now, once the Fed is done hiking rates, that will probably be the signal when gold is going to start to outperform and move higher and really sustain it. And the good news with that forecast is the Fed is starting this rate hiking cycle way too late, as everybody knows. So I don't know. I mean, there's the March, April, May, and July. There's those 4 meetings. I don't think they're going to be able to hike past July, maybe May or June. I mean, I forget when the meetings are, but maybe before the meeting before July might be the last chance they have to hike. And so I think at that point in time, that'll be the point when you really want to get bullish on gold. So here and now, I think gold is at a high point and it's likely to come down as the Fed starts hiking.
Okay, so if things kind of change a little bit here, what support and resistance levels are you looking at that are going to be in play with the hiking of rates?
Well, we've seen, at least on Friday at the very end of the session, we saw gold break out of that triangle, but I think there's a possibility that could be a false break and that it might come down. So to see a real breakout in the market, we really need to see a weekly or monthly close above 1900. That is going to be the real significant start of the next leg higher. And so I'm skeptical that, over the coming days and weeks, I'm skeptical that gold is going to break above that level. However, if I'm wrong, that's what the evidence will be. It'll be that gold makes a weekly and a monthly close above 1900. So that's very significant resistance. And I mean, here and now, 1860, 1870, I think this is going to be significant resistance in the short term. On the downside, I mean, there's quite a few levels. I mean, on the weekly, I think you have 1750 or 1760. I mean, that's probably a key level to look at. I'm less concerned with the downside support now in gold, although I do think, I mean, it's possible gold will come down. I mean, to me, the better way to try and time the market over the coming months will be watching, the yield curve and the Fed as they hike, and watching the market start to discount the Fed, ending their hiking, and the Fed, wanting to cut rates again, and there and calls for stimulus and payments to people again and things like that. I mean, fundamentally, right now, the problem for gold is that politically, inflation is the number one issue, and with populism, the stock market going down 20 or 25%, that's not necessarily that bad. I mean, especially if inflation comes down in tandem with the market coming down that much. So now those things will be bullish for gold, but the narrative has to change, right? So right now the narrative is it's more about inflation. We got to stop inflation. It's more about that than, well, people need more money. We got to cut rates. The economy's weak. So in other words, when the narrative right now is about inflation, not growth, when the narrative shifts from inflation to growth, like, okay, the economy is going to be in a recession, the market's down a lot, we got to start printing money again. When it shifts to that, that's the point when gold will really start to take off. And I do think that'll happen this year. I don't think it's that far away, but I don't think it's coming in a month or two, maybe 6 months, 4 months, 5 months, something like that. That's kind of my macro outlook and how I see it for gold. And so I'm more concerned with that than particular support and resistance levels for gold. But I mean, resistance now, gold is right there, and then 1900. So those are the key levels to watch.
Jordan, how about for silver? Because a lot of people, they say that the gold price confirms what silver is going to do. So if we're kind of looking at a little bit of a downside with gold, are you seeing the same with silver?
Yeah, silver has important weekly support at 22.00. So right at 22. And other than that, 1870 is a really strong area of support. And if you look at the weekly chart for silver, it's been able to hold above 22, but I mean, it doesn't look that great to me. It looks a little precarious. And so if we see gold, if this move that we had is like a false move and gold comes down hard, that could pressure silver below 22. And so that the 1870 level, I think that's the one to keep an eye on, especially if, gold can't break out here and it rolls over again.
You mentioned the Fed may stop raising rates mid-year. So if that happens, are you looking at QE again or some form of QE? Because QE hasn't exactly been a friend to gold or silver. So I'm wondering how that might factor in again to the movement of gold and silver.
I don't think QE is that important. I think it's more about real interest rates and also fiscal support. And of course, President Biden he wanted this huge, reconciliation bill, 6 trillion or whatever it was, and then it was going to be 2 trillion, and he couldn't get the support of 100% of the Democratic senators, which he needs. However, if if we see the market come down and we see these concerns about growth materialize later this year, then there would be more political pressure to spend more money, maybe have some giveaways to people again. And so that, if you get that fiscal support coming back, in the Fed cutting rates at the same time, second half of the year, that's going to be the setup for a good second half and potentially a really good 2023. So those things to me are more important than the QE.
Okay, great point there. We did see a recent rise with the 10-year yield hitting some 2%, even went a little beyond 2%. And we saw gold make about a $30 run or so to the upside. Are these two moves connected, or is this a one-off? Essentially, what I'm asking here is, what should we expect from precious metals should that bond yield continue to rise?
I think I haven't really thought about that, because I think that if you look at certain things in the bond market, like indicators of inflation expectations, they're starting to come down. Now, commodity prices have continued to rise. A big reason for that is copper, or not copper, excuse me, oil. And so I think when oil stops rising, you're going to see inflation expectations come down quite a bit. And as I said, there, other than oil right now, there's other indicators that are showing that inflation and inflation expectations will come down. And so I think that because of that, you're going to see long-term bond yields. I think they're going, if they haven't already peaked, I think they're going to peak pretty soon, and we'll see them, come down for most of the year. So, I mean, if they were to continue to rise, it's hard to say. I mean, it depends on so many other factors. I mean, gold has been holding up really well so far. I mean, real interest rates have been rising, which is bad for gold. I mean, long-term rates have been rising, and gold has held up better than I would have expected. But I don't, I don't foresee. I just really don't think we're going to see long-term yields continue to rise. Now, let me just say, we are in a new secular cycle of inflation. But if you study history, you look at the 1940s, you look at the 1970s, there are big ebbs and flows within a long-term period of the rate of inflation rising. So when I'm talking about inflation going down, I'm just saying, yeah, it's at 7 to 7.5% right now, but it could come down to 5%, 4%, maybe the low is, 3.5%. And, before it starts rising again. So that, I mean, I'm not saying it's going to crash and go down to 1%. So that it's important to understand those things. And to go back to my last answer, talking about the rate cuts and the stimulus for 2023, those things could cause a mini boom where you get, you get this reflation in the economy in 23, 24, 25. And then, those could be the times when you see inflation start to run and pick up again and become a major problem. But just with looking at things right now, I think, inflation, we're more at a point where it's topping and it's going to be coming down over the next 12 months. But, after that, if we get these policy changes, then yes, inflation will be rising, after this little downturn.
Okay, so short-term silver and gold may have a little bit of a bumpy ride, and after that, it should do well.
Absolutely. I mean, I think it's set up really well. We've talked about the cup and handle and gold, and I don't know if that's going to break out at the end of this year or sometime next year. But so I try and look at the the technicals as well as the macro fundamentals, and given this picture that I'm talking about, if my reading of these things is correct, then we're going to have catalysts for the precious metals market. Especially, and remember, the market, it looks forward, it discounts, it anticipates. So if these things are these things are coming in the second half of the year, or at the end of the year, more stimulus, more spending, rate cuts, gold will discount that several months in advance. That's why, we could see gold bottom around, mid-year, give or take a few months before, a few months after, and start to get going, anticipating these things before they get enacted. And, that those things could be the catalyst to, for gold to break out of the cup and handle, and really start moving big again, especially, next year. And, gold will drag silver higher in that case. I think gold, silver will outperform gold either when gold it makes that breakout above 1900, or when gold breaks above, 2050 or whatever the high was. Those will be the points when silver will really start to outperform gold. But it's just too early right now. These catalysts are not quite there yet. But that being said, the fundamentals, I think they're shifting. I think they were negative all the recent months I've talked to you, but now we're at a point where the fundamentals they're shifting towards neutral. And, maybe the next time I talk to you in a couple months, I can say, yeah, the fundamentals will be bullish, because we could be really, that could be the point when, okay, the Fed they're definitely stopping hiking rates, and then we're looking at more stimulus.
Okay, we'll definitely look forward to that. Jordan Roy-Byrne from the Daily Gold. We appreciate the time you've given, and I hope we can do it again soon and see that gold and silver rise.
Thank you, Patrick.
That was Jordan Roy-Byrne from thedailygold.com talking about the short-term price action for gold and silver with interest rates coming up. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.